Hi there, welcome to Kneppy Invest. Thought it was time I'd just give a bit of a mydeal.com.au update looking at their quarter report, their Appendix 4C for the December quarter. My expectations were that mydeal.com.au would have a good quarter, operational cash flow positive, a good jump in receipts, not only quarter on quarter but also year on year. And the reason behind my expectations is simply because Christmas falls in the December quarter and retail companies, including on-tail retail companies, should have a pretty good quarter. However, in saying that, retail numbers were down, I believe, in October and November, so that could have hampered or hindered MyDeal's results for the quarter. So before we have a look at their Appendix 4C for the December quarter, just a few facts in regards to this company. MyDeal.com.au, and I think I'll just call them MyDeal from now on, is an online retail marketplace. And maybe unfairly, I do compare MyDeal to Kogan, also to Amazon. And personally, I prefer to use Amazon and eBay to buy things I want to buy online, simply because of price. I have gone to the mydeal.com.au website, and I really didn't find anything that fancied me. And anytime I Googled something I want to buy, I'm always directed towards eBay, Amazon, sometimes even Kogan, and very rarely mydeal.com.au. So maybe MyDeal is not really targeted towards me. Now, this company was founded in 2012 and listed on the ASX 22nd of October 2020. And at that point in time, there were a lot of tailwinds behind this sector, online retail, because everyone was buying stuff online during 2020 because of COVID-19. But it was around this time that first news of vaccines came out. And I do remember Kogan took a massive hit in the share price around this point in time because people believed COVID-19 wasn't going to be much longer as an issue in the world, which they were wrong about. And no one would go back to online retail. Everyone want to go to those brick and mortar stores, which I find ridiculous because online retail is the future. And personally, I'd much rather buy stuff online than go to a shopping centre, simply because I just don't like people, particularly large groups of people. Now, the CEO founder is Sean 17. More than likely did not pronounce that right. He has a 49% holding in this company. So definite skin in the game, although in saying that, I have heard that research shows that the ideal holding for a founder is between 15 and 30%. I should find this research to understand why like a 49% holding is not ideal. There is probably some reasons behind it, but I don't want to go into that right now. The markup of MyDeal at 61 cents is 160 million. And later in this video, I'm actually going to compare MyDeal to Kogan. I could be doing that a little bit unfairly because they are at different stages in their life cycle, because Kogan is a much bigger company at this point in time. But I will compare mydeal.com.au to Kogan back in 2017, and there are some similarities when you look at the values between the two. And the ticker code for mydeal.com.au is MYD. I'll briefly touch upon the financial state of MyDeal, looking at financial year 21 numbers and comparing it to financial year 20. And during this period, from 2020 to 2021, we should have seen significant growth in this business because there was a lot of tailwind behind MyDeal and online retail. And you do see that in the numbers, particularly revenue, gross sales, active customers. Revenue more than doubled, gross sales more than doubled, and even active customers didn't quite more than doubled, but it did increase from 488,000 to 894,000. Active customers is important because those are the sort of customers you want because they are active on the mydeal.com.au website at least once a year. I think that is the definition, at least once a year. For me, I'm probably less than once a year, so I would not be considered an active customer for mydeal.com.au. Company was not profitable or cash flow positive in financial year 21, but they were in financial year 20. So more than likely, this company is or did spend to grow in financial year 21. They had $42.7 million of net cash at the end of financial year 21 and not much debt, if any debt at all. So even though the market cap was about 160 million, if you take into account the cash or the net cash, the enterprise value of this company was more like 121 million and the price of sales at 5.4. Let's go back to the first quarter they released an Appendix 4C, which was the December quarter 2021. So this was their first quarter as a publicly listed company. And that's the reason why cash on hand actually grew $30 million, because that was part of the IPO process. Receipts to customers, $71.5 million. The company was almost operational cash flow positive if you take into account the increase in inventory during this quarter. So the increase in inventory was $2.4 million, and mydeal.com.au was operational cash flow negative by $2.3 million. The other thing is active customers, 813,000 at this point in time, and they also have a private label, and that is something I am going to be tracking through the future, because you would assume that the private label for MyDeal would have higher margins, maybe even significantly higher margins than the non-private labels. In quarter two, private label accounted for $2.8 million in receipts or revenue. Now, I did expect the most recent quarter, the December quarter of financial year 2022, to be a really good quarter for this company. Now, they did mention in their commentary that retail numbers, according to the ABS, did fall in October, November by a significant amount because of lockdowns and that sort of thing. And they won't say they were gloating, but they did mention that they did perform and grow during that period. So maybe that is one slight positive, but I still expected a little bit better numbers than this. Receipts to customers did grow $15 million from 1 year ago, but we saw a significant increase in product manufacturing and operating costs, which were up $16.5 million. And I do want to know why product manufacturing and operating costs grew by a lot. And there was no explanation by the company why they did see a big rise in that section. Advertising and marketing grew by $300,000, staff costs up by $1.1 million, and inventory grew by $3.2 million, which actually did surprise me. But maybe that was an increase in inventory because of the Christmas period. Some of the other things to look for: active customers grew by 150,000 over the past year and finished just shy of 1 million. And private label almost tripled, actually it's over tripled, because it went from 2.8 million to 9.9 million. So that's definitely the growth I want to see. Now, cash on hand actually fell by a fair bit, $7 million through the quarter, from 47.2 million to 40.2 million. And the company was actually operational cash flow negative by $6 million. And that actually did surprise me, even though the increase in inventory for the quarter was 3.2 million. But just keep in mind that operating cash flow of negative 6 million. Also keep in mind the increase in inventory of 3.2. So if you take that into account, this company was still operational cash flow negative by 2.7 million. This was a gross sales history of the company since quarter two financial year 20, and you could just see how this company is affected positively during the Christmas season, because the second quarter is usually the best quarter. Probably won't say usually, but it is the best quarter. We saw that in 2021, and more than likely we're going to see it this year as well. And then the next two quarters, quarter three and quarter four, we should see gross sales and receipts fall away a fair bit. And more than likely that will happen in the next two quarters. So this company does have some seasonality behind it. You have to be aware of that before you get too excited if you do see a massive increase in receipts in quarter two for this company. One thing I'm also tracking for this company is active customers. And we saw massive growth in active customers during 2020 into 2021. In fact, it grew from about 280,000 all the way up to about 900,000. But we have seen active customer growth really trail off over the past 4 quarters. It is climbing, but it's not climbing at the same rate we did see about a year and a half ago because of COVID-19, and just the online retail presence was increasing, and those who weren't doing online retail before COVID-19 found themselves needing to do it during that period. And that's why active customers for this company grew. But it is still growing at a slower rate, but in the most recent quarter, it actually did pick up the growth by a little bit. Now, I just want to mention a couple of comments that I did see in MyDeal's commentary. The first one was, as we execute on our strategic priorities, it is important that we continue to invest for growth and scale. And that I'm very happy they included that last word, and scale, because that is something I'm looking for in all these companies, every single company that is not continually operational cash flow positive or profitable. I want to see the companies reach scale. And that means increasing your revenue or your receipts at a quicker rate than your costs. That's very important for me, and I'm just happy that management are aware of that. Some management teams of some of these high growth companies are not aware of scale. They just want to see revenue grow, and they don't care if costs are growing at a greater rate than revenue. Now, the other comment I just want to mention here is in regards to operating cash flow. Excluding investment in inventory, operating cash flow for the half year was 4.5 million. Notice they use half year numbers, not quarter year numbers, and there is a reason behind it, and I'll show you that in the next slide. Now, we have to be aware as investors that whenever we read a commentary in regards to a financial statement released by the company, that the management and the marketing team will try to spin the financial numbers positively no matter the results. And we definitely saw that in the previous slide when they looked at the operating cash flow for the year to date, the 6 months, instead of looking at the current quarter. Because if they just focused on the current quarter, that statement would have changed to excluding investment in inventory, operating cash flow for the quarter was negative 2.7 million. So just be aware that you just don't read the commentary when it comes to financial results released by a company. Now, fairly or unfairly, I do compare my deal to Kogan, but it's unfair on my deal to compare that company to Kogan right now. But if we go back to 2017, June 2017, in fact, my deal and Kogan look very similar. And when I say my deal, I'm talking about my deal right now, not my deal back then. So right now, Kogan has gross sales of 690 million. That's half year numbers because they haven't given us quarterly numbers. Customers are 4 million and the markup of 600 million, which has fallen a lot over the past year. In fact, the markup might have reached almost 2 billion at one point in time. Now, if you look at Kogan back in June 2017, they had gross sales of 80 million or around 80 million, which is very similar to the gross sales my deal has right now, 83.1. Kogan had customers of 955,000, very similar to my deal, who had customers of 964,000. And the markups of both companies, very similar, 156 million for Kogan, 160 million for my deal. And then 1 year later, Kogan's markup had climbed from 156 million to 600 million by the end of financial year 2018. Now, that does not mean that mydeal.com.au will quadruple in value over next year. More than likely, we'll see completely different paths these companies will travel down, but just keep in mind that MyDeal is a growing company. It might not be quite at the same quality as Kogan, but there's still a lot of growth in this area. I am fairly bullish on online retail, and I think any player in this space will have the potential to see significant growth in the next 5 years. Now, as we look at the daily chart for MyDeal, this is the 1 year daily chart for the company. It does not look pretty at all, particularly if you have been a shareholder of this company during this year. Now, back in February of 2021, the share price of MyDeal had reached $1.40. And then over the next 4 months, the share price fell from $1.40 to a low of 55 cents, which was reached in May. And then the share price of MyDeal went into this upward channel. And I depicted that upward channel by these two sloping blue lines. And the share price of MyDeal remained in that upward sloping channel for about 7 months. And it broke that channel, went below that channel in the middle of December of last year at around 80 cents. And some people would say that technicals don't work. In this case, it definitely did work because as soon as it broke through that channel, that was a sell signal and the share price has continued to fall. In fact, it's fallen from 80 cents to a current share price of around 60 cents. So at this point in time, it has moved into a downtrend, a little bit of negative sentiment around this space, this area into this company. So I would remain on the sidelines right now if I wasn't a shareholder, unless you think right now is really good value for this company and your time horizon is 5-10 years down the track. That's all I have for this update on mydeal.com.au, looking at their Appendix 4C for the December quarter. If you do have any questions about this company, or Kogan, Amazon, or maybe any of these other companies like Spotify, not Spotify, what's the other one? Shopify, fairly similar named companies, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.